The topic of our next panel discussion is Bharat's Financial Saga, a glimpse into retail lending innovations for affordable credit. May I request our panel members to join us on stage? Beginning with Mr. Neeraj Gupta, Managing Director of Branch International, Mr. Jatinder Handoo, CEO of DLAI, Mr. Santanu Syam, Head Digital Hub, Unity Small Finance Bank, and the session will be moderated by Mr. Vikrant Kulkarni, Principal Consultant, the Digital Fifth. Once again, I would like to introduce you all to the panel members. We have with us Mr. Neeraj Gupta, Managing Director of Branch International, Mr. Jatinder Handoo, CEO of DLAI, Mr. Santanu Syam, Head Digital Hub, Unity Small Finance Bank, and the session will be moderated by Mr. Vikrant Kulkarni, Principal Consultant from the Digital Fifth. Over to you, sir.
Yeah, thank you. Just prior to this, sir, we had discussion on the credit lines on repair, which is again a part of upcoming retail lending product as such. And the topic we are going to cover is more from the retail lending. And the growth which retail lending has been seen so far, it's phenomenal. The way it has been emerged into the market, it has become one of the product which is aspiring. And as a consumer, it is very easy to use as well. And the way we have been exploring to use, lenders have been exploring to use the alternate data points. It has become more available for all. So availability perspective also, it is getting very good penetrated in the market. So from that perspective, we would like to learn from you a few of the pointers. So we'll go ahead with the questions on that. So Neeraj sir, we'll like to understand from your side, there is too much of digitization which is entered, which has made this journey simplified for all. So considering the digital public infrastructure, considering KYC, account aggregators, and maybe more from the alternate data points, how do you see this is getting ready for the future use as well?
Thanks for having me. Good to be here. So, just to introduce, I'll introduce the organization I represent, Branch International. So we are a retail lender, a digital lender, and so I can provide my thoughts from that perspective. When we look at the P&L, we can kind of divide the entire P&L into, let's say, cost of operations, at least the cost side, right? Cost of operations, cost of acquisition, and cost of credit, right? The changes I think that you were teeing up around digital public infrastructure and just this digitization push that we are seeing, I think has helped reduce the cost of all these three buckets, and that's where and that's how it is making credit accessible to a larger population, larger percentage of the population. You rightly mentioned KYC. If we talk about operations, I think KYC has been over the last 5 to 7 years pretty much the biggest game changer. I can do Aadhaar OTP, I can do CKYC, I can fetch documents from DigiLocker, and a bunch of other things. So one of the biggest impediments to financial inclusion used to be this cost of operations, and as long as there is a manual component to it, the cost will obviously be high. So the moment you digitize some of these processes, a lot of the sub-steps can be automated, and when you do that, the cost reduces, right? So I think that's the benefit that organizations like us, lenders like us accrue, and then the same benefits get passed on to the customer. I think on the operation side, there are other smaller bits around. I can do bank validation right now or PAN validation right now, but I think if I have to pick the other biggest game changer, that's been on the payment side, right? So, for example, in our customer segment, 90% of the customers prefer UPI over, let's say, net banking, or over using a debit card, although those are also digital in nature. But the UPI is backed by the government. It's a quasi-governmental organization, and the infrastructure is just so fantastic. It's the customer experience is great, and that's why you have 90% of the customers choosing that. And I think that's been the other game changer for us. The moment ease of payments increase in a lending business, the delinquencies also come down, which means the cost of credit is coming down, which means I can again pass on that benefit to the customers.
Sure, sure, sir. Thanks. Jatinder sir, would like to understand from you, like there are a lot of innovations which are happening today from the perspective of the retail lending concern. So, would like to understand from you that what are the new changes that you are seeing to coming to this retail lending propositions?
So thank you so much for asking that question, and to the esteemed audience in here, I would like to share a little bit about Digital Lenders Association of India, which is India's premier and perhaps the largest association for entities engaged into digital lending. And we, there are lots of kind of engagements we have around these topics, and both of the gentlemen sitting on my left and right side are members of DLAI. So to begin with that, fintech lending or digital lending in this country has really revolutionized the way credit is being disbursed to the last mile, and the kind of speed or the acceleration has taken place, especially after COVID. To come, to address your specific questions on innovations, and I think there are broadly 4 stages in life cycle of a lending product. You begin with customer origination piece, then assessment and underwriting piece, credit disbursement and sanction, and then finally it is a recovery. So I'll kind of restrict myself on innovations around these 4 pieces which have taken place. On origination side, it's fairly simple. Mostly nowadays, the digital lenders originate loans. And by the way, let me share a number with you and with all the audience here. We recently did a study with CRIF Highmark for our members and the entire ecosystem. We call it as a FinTech Barometer. It is also available online, and it was released last month. So as far as consumer lending is concerned, and to be more specific, the retail lending, the entire size of retail lending market in this country is around 7.5 lakh crore. Out of which the regulated ones, because I'm not talking the number, because that takes into consideration the regulated players only, because there are platform lenders as well, but that portfolio gets reflected on lenders book. So the contribution in terms of value of this industry is around 8% out of 7.5 lakh crores. Roughly 60,000 crores is what the contribution is. But essentially on origination side, every 1 out of 5 customers who are onboarded for retail lending segment, they are originated by digital lenders in this country. Now, which brings the first point is the algorithms, the algorithm based and the technology based onboarding is the first critical piece. Then comes assessment of their applications. Again, you use unbiased ethical algorithms as a one thing, but what is important is also an alternate data, especially in case of retail lending. So although in case of small business finance, they also take into consideration traditional ways of underwriting a customer, but alternate data is used by many lenders in this country, especially for personal loans. Then, disbursement, of course, the payment innovations in this country have been great. And I'll again talk about the UPI. And recently, RBI's institution, which is called CAFRAL, came up with the India Finance Report 2023. I think it was released in November or December. And then they have documented the positive complementarities between UPI and digital lending. So digital lending increases multifolds whenever there is a UPI adoption. The reason for that is again the data trail which it generates. Now the final thing is regarding the recovery part. Disbursement happen and then the recovery part. So recovery, again, with the technologies like OpenAI and other similarly large language model-based technologies which are being used by different digital lenders now to kind of, use those technologies for reaching out to customers in case of recoveries. So I think that is, and this happens in addition to, these UPIs and the money transfer systems. So I think broadly on these four sides, these are some of the innovations. Over and above, I would like to mention on the product side, like small ticket personal loans, STPLs, which form roughly, around 80% of the entire portfolio, less than 1 lakh rupees category. So that's how I categorize STPL. So that product itself is and the number is still bigger for the product which is less than 50,000 rupees. And ordinarily, for a large legacy institution, it is, not, I would not say that they don't intend to, disburse that, but the kind of cream or remuneration in that is less. So on a product level, it's an innovation. And then, on a model level innovation, if you ask me, say, for example, P2P lending, central bank digital currencies. So all these are innovations. So I'll pause here for the moment and, happy to contribute in next round. Thank you.
Sure, sure. Thank you. Thank you for covering in detail and throughout the life cycle of the loan. Yeah. Santanu sir, will like to ask you, like from the perspective of the distribution of loan, there have been a lot of support of the fintechs along with the banks, which have been happening through, right? I mean, you can name the example is even this embedded finance product, where we call that embedded lending products, are also evolving. So looking at that, how do you see the role of fintechs or being a part of the ecosystem and supporting banks also to get more the retail customers and the distribution of the loan through them?
Thank you. Thanks for the question and giving us this opportunity to speak on this forum. So I represent Unity Bank, which is the youngest bank in India, and we are positioned to set up a digital bank, which is our positioning. We want to be a digital bank. Now, in the lending space, I think, we have two strategies in place. One is our captive lending, which is through our own mobile, through our internet. We want to grow our lending business. And then there is this inorganic business, which is the business which will come in through fintech, which is the business which I manage, which is through an entity we have created within the bank called the Digital Hub. The role of the Digital Hub is to collaborate with fintech and to bring in business assets, liabilities, cards, cash management, any product or innovation which is available in the market, to bring it for our customers in the bank, and also take our products and services and make it available in the marketplace like Policy Bazaar, Bank Bazaar, and make it available in the marketplace so that our products are available to a larger audience. Now, what do we see the role of the fintechs to be in this whole model that we have for inorganic growth in Unity Bank? The first and the critical role is the amount of digital DSAs who are available in India today to help us grow as a bank is infinite. The opportunity is huge. And if I try to do that growth on my own through a captive channel, I will be seriously falling short with the speed at which my competition is growing. So besides trying to grow my own organic business, the fintechs are digital DSAs who bring in a plethora of products. And for any market segment that you want, there will be a bunch of fintechs who will provide you a database, who will meet your target segment requirements, and will be able to filter from the database and give you a basket of customers where practically you can convert 80-90% of them into the product that you as a bank sell. So the first place where the fintech comes in is the role of a digital DSA. They give you very, very targeted customers. You need to tell them what you want. From their large database which they have collated over the years, they're able to filter out and give you a very focused sales funnel which you can convert. So that's on the front end. Now, once they give you a digital lead, you as a bank need to be able to convert these digital leads into customers for the bank And that's where, again, at the back end, we have what we call technology service providers who are also fintech. So at the back end of what we have set up in Unity Bank, in the digital hub, we really don't depend on people for processing or converting any sales lead. So at the back end, we have fintechs who are responsible for credit checks, for identity check, for fraud check, for digital execution, for digital stamping, and for bureau check. All these checks, which typically you would do in an assisted journey if someone were to come to the branch, is now done through technology service providers who are fintech. Some of them, all of you are familiar with, are Casa, Parfios, Digio, Legality. I mean, you name any banking service or any financial service which is required to convert a lead from which you have received from a fintech into a customer for Unity Bank can be actually done through a fintech at the back end, which is integrated into the bank system. So what we have today is about 15 fintechs who are integrated into the bank systems, and they help us move the transaction without any manual intervention from commencement to actual conversion in a matter of 4-5 minutes. And what you see is you then have set up a process which is people dependent. It is not dependent on what time the customer comes in. You are agnostic of capacity, you are agnostic of time, and you can completely convert any customer who comes in a matter of 4-5 minutes and disperse a loan. So on the technology side, the fintech gives you the capability to set up an infra where you don't really need to invest on very high spend on technology, high spend on people. It's practically setting up almost a zero cost kind of setup to be able to start your operations and then scale up. So you have two clear benefits of partnering with fintech. One, they give you a very defined sales funnel which you can convert easily. On the back end, you have technology service providers or fintech who give you what we call in our parlance STP facility, which is straight through processing, which means that no agent or no banking employee needs to touch that transaction. End to end, the systems check everything which you would do if you were to do it manually through an eyeball check, and in a matter of 4 minutes, you have disbursed a loan. All the correct processes have been followed. You have all the audit trails. You have done the KYC. You have checked his documents. Customer has been given an opportunity to electronically sign the documents. The bank signs electronically. So you can imagine a situation about, say, 7-8 years back. To disperse a loan, there would probably be a single loan would probably go through 4-5 pairs of eyes and hands. Today, we are able to disperse loans without any manual intervention at all. And that's where fintechs really have made a difference in being able to create an environment where we can grow our business. Today, we are about, say about 7 months old in our business. If the volumes were to go up 10 times, we would still not require the kind of people or investment required to scale up. So it's a very flexible, very people agnostic, and everything is STP. So it's a customer delight and also a delight for the bank, because with minimal cost we can grow our business.
Understood. Got it. Yeah. Neeraj sir, from the perspective of retail lending or any lending process per se, underwriting is one of the important aspect, right? I mean, even both of the panelists also touched upon that. So would like to understand from you that as a lender, how you are envisaging this underwriting processes to be improved upon so that affordability and accessibility also will be there for all.
Yeah, I think as Santanu sir also touched upon it, I think we need more and more processes which are STP, underwriting at a, if I have to oversimplify it, I'll say it's about minimizing false rejections and minimizing false approvals, right? There are other aspects to it. You just figure out the right ticket size, affordability, price the right risk, etc. But the way these things come about, where you're trying to minimize bad rejections and bad approvals, is by ensuring that the accuracy improves, by ensuring that the speed improves, and the cost improves. Now, I think there is, I think Jatin also spoke about, the volume that um, digital lenders have been able to lead, and, the Kafral report, which actually says that by 2030, digital lending will overtake the traditional lending, at least in the, let's say, unsecured space, right? So the reason why this will happen is because, when you have a lot of data, I think the underwriting through automated means, whether it's AI driven or it's simply heuristic driven, can be at par or potentially even better for newer segments if you have, if you can process that data. And we are seeing the transition, to your earlier question around the public infrastructure. So, we are, building more and more banks are now part of this account aggregator framework, right? So you have somebody's entire financial footprint available, by a single, let's say, consent, right? So the moment you have that data, the moment you have that digitized, it just simplifies underwriting and it makes it actually more accurate, less error prone, thereby again reducing costs. And it allows, as again Santanu sir was referring to, scale, because there is less manual intervention, it's fast, and so on. And yeah, I think it's a feedback loop. Once you improve for speed, once you improve for cost, you'll see more and more adoption.
Sure, sir. Jatin sir, would like to understand from you, like from your perspective, how crucial are regulatory frameworks which are fostering this growth, and what role do they play into the retail lending side?
Well, thank you for asking that. That's really interesting piece. Many of us are intrigued by the way regulators take specific actions, and there has been a lot of talk going around regulations and digital lending or fintech, especially for last few days. But let's also understand, and that kind of underscores the relevance for and importance of in the trust factor. I would like to address this question on two levels. One on the regulatory side, one on the conduct of business and customer engagement side. So now it's and first of all, thanks a lot. RBI is a very progressive and I would say a benevolent regulator in many terms, that there is a consultative process, and there are, even if today I'm sure many of us were glued to our mobile screens and watching, listening to RBI governor after the monetary policy committee meeting, the kind of the address of governor. A couple of things, which reminds me, even today he highlighted, like, customer grievances redressal system in place, increasing the scope of key fact statement, and, authentication of digital transactions by using two-factor authentication. Mostly, SMS is most popular in that way. So all these developments, and including, SRO and other pieces which are coming in, which are still work in progress. So these nuts and bolts, or the pieces of regulation, actually increase or help increasing the trust element in the payments or digital lending ecosystem in this country. One of the important aspects which many talk about when we talk about digital lending and fintech is the cyber crimes or cyber related issues. I'm specifically talking about unauthorized lending apps. Many of us, and I assume that at least few of you sitting in this room may have, received some calls, random calls, messages, texts from so-called, those who purport themselves to be fintech players or lenders, but actually are cyber thugs or cyber criminals. So this piece, the unauthorized lending apps, cyber crime, is the another piece. Which, of course, DLAI is taking a big part in that through Fintech Suraksha initiative, involving multi-stakeholder kind of a engagement, involving, all our members, law enforcement authorities, different banks. We have taken that to other stakeholders as well. But that's important. But what is more important is the trust elements, and trust is driven, is a direct, kind of outcome of the user interface which a customer has with the technology or with a touch point. And there I think, fintechs are doing a great job, especially when it comes to the user interface. And since, the topic of this session when I was reading is, if it's written over there, it's Bharat Financial Saga. So let's also talk about a little bit about Bharat. And when we talk about Bharat, the majority of our population lives in rural areas, and thanks to RBI's efforts and efforts of different stakeholders, right from financial inclusion plans of RBI, having an alternate, lending models, like business correspondents, CSCs, and then of course the fintech players. So trust is a continuing process, and that's how public policy and regulation foster that trust in India. So one failed transaction at any touch point would probably will create 10x negative impact among rural masses, especially in rural areas. You and me can probably afford, if you go to a white label ATM or any particular, touch point, and while withdrawing money, transaction failure is there, or even, mobile tap and pay or that kind of transaction failure is there and money gets deducted. Of course, there's a framework, but at that point, you and I can probably afford that. कि ठीक है, मतलब 500 रुपया गया तो कोई दिक्कत नहीं है, मैं दूसरा ट्रांजैक्शन कर देता हूँ, वापस आ जाएगा. बट यू इमेजिन अ पर्सन इन बाहर, मतलब हमारे जो गांव में जो लोग हैं, एंड इफ़ यू गो देयर रूरल वुमेन, उसके पास तो होता ही 400 रुपये हैं, और 500 चला गया तो वो कहाँ से, दे विल. सो द पॉइंट इज दिस, the interface at technology, touch points is very important. And I am sure that, DLAI members and other, players in technology are doing a great job in addressing that. That's no more a challenge. And the way regulator is facilitating it through different regulations, through different models is also very important. And the third piece which I, talked about is the digital Suraksha, Fintech Suraksha initiative. So I urge and encourage all of you to kind of participate in Fintech Suraksha. It is available across our social media platforms. Our members are there, and the large part of community is there. So I think these are the elements which drive trust. So I'll pause here, and maybe you can move to the next.
Sure, sir. Thanks. Santanu sir, would like to ask you from the perspective, we had a chat about the bank fintech relationship, how those are been building and all. But what are the critical success factors you see in this relationship to grow and to serve the maximum public in the, maximum potential borrowers in the ecosystem?
Yeah. So, when you set up digital business, there are three pillars which you have to watch out for, which the regulator is going to check whether you are in control of the business that you have set up. The three pillars are people, process, and technology. And in the digital world, the technology is social, mobile, analytics, and cloud. So, if you look at this whole area, these three pillars, if you need to set it up, there are very, very detailed guidelines from RBI, and the main one you need to really understand and implement is the digital lending guidelines of September 2022. In that, RBI is actually wearing the shoes of the customer and asking you as an entity who is in the financial market that how are you communicating with the customer, and they are ensuring that every stage in the customer journey there is transparency in what you are selling to the customer. So a critical part of the whole process which the regulator wants you to follow is to see that at every stage of the customer journey, you are communicating with the customer because you're not meeting him face to face. You are doing it with a non-face-to-face customer. So at every stage, you need to take a customer consent to move ahead. You have to tell him what are the risks when he says yes to something, what are the risks, what is the downside, and what he can gain or lose when he takes a particular step. So the disclosures by the regulated entity, which is the bank, is critical. The consent of the customer to take his data, like my colleagues here said, to do an underwriting of a loan or to do his KYC, we need a lot of customer approvals, consent, before you can access the government database which the government of India has made available for you to do the credit check and KYC check. The RBI has, in their guidelines which have come in September 22 and again in February 23, have very clearly defined what is it that you need to give to a customer in a digital lending space in terms of what should an offer letter contain, what should a key fact statement cover, what should a sanction letter cover, what are the interest rates which are allowed, and what can be classified as something which is a personal loan or a business loan. So I think, if you look at our business, the opportunity is huge, but you have to first get your infrastructure right and the process right. So, for people who are in the business of digital lending, you would find that when you're doing digital lending, to set up the business is very easy because you have a lot of fintech. They will give you the capability through an API to integrate your system with their system and the transaction goes through. But when you are facing the regulator, you have to prove that every step that is mandated in the regulation is being followed. They are not really concerned whether you're doing it through technology, whether you're doing it through paper. So as an example, everything which you are doing using technology has to be converted into a process note. And for people who have been in the banking system or the lending system for a while, you will understand the complexity involved when you don't see what you are, approving. It's all happening behind the screen. It's happening through algorithms. It's happening through analytics, right? So you're not touching a transaction. When you have to convert that into a departmental operating guide or a standard operating procedure which RBI will ask for, every step that you have programmed in your system, you will have to show them that the algorithm has what logic you have used to do that particular process, how you have tested that algorithm, and you'll have to show them on a day-to-day basis, whatever system is doing on a STP basis, you have a process of actually doing a concurrent audit on each of them to check the accuracy of the transaction and that you're not violating any guideline. So, to summarize, I think, setting up a digital lending business is easy. The difficult part is when you face the regulator and you're required to prove that you are following all the guidelines, remember that they expect a lot of transparency that you share with the customer, you take his consent to access any data that you need to process a loan, and at the end of it, the document which you share with the customer must be in English and in vernacular language so that he completely understands what he is committing to. As a banker, as a financial institution domain expert, we were taught when we started this business of banking that when you get a customer, there are two things you got to look at. One is the ability of the customer to repay a loan, and two is the willingness of a customer to repay a loan. Now, the process which is there today in banking, whether you do it digital or non-digital, the ability to repay a loan is something you will have to demonstrate to RBI, and you also have to show that you have done the due diligence to show that there is a willingness to repay. And there is enough data which is available with the bureaus, and like my colleague said, there is alternate data which is communication data, e-commerce data, account aggregator data. All that data helps you assess the ability of a customer to repay and willingness to repay, and the guidelines of RBI on digital lending is focused around these two areas. So it's very well documented. If you really want to be on the right side of the regulator, do read the regulations of September 22 digital lending and the FAQ which is February 23. If you implement these two guidelines, your business will come up with a completely clean slate and you needn't worry. You can grow without worrying whether there is any regulatory breach or not. That's my sincere advice on fintech-based lending.
Sure, sir. Sure. One last question to you, Jatin sir. Would like to understand what would be the impact of fintech SROs in lending ecosystem? Sorry.
No, I think that's a great one. And since you asked about the impact of fintech SROs, let's understand. And by the way, RBI has already put into public domain draft framework for comments on fintech SRO. And then, of course, we are also going to share the comments. But what is important is the expectation and the philosophy behind having a structure like self-regulatory organization or the regime of self-regulation in the country. I think India is not new to it. There are already RBI recognized two self-regulatory organizations in NBFC microfinance space in India. Globally, you have that in Switzerland. In US, there are multiple SROs, whether or not recognized by any public agency. In fact, especially on the securities board side. In India, there are other SROs. I think two of them, at least I know, recognized by SEBI also. So the role of fintech SRO coming up and its effect on financial technologies or the firms engaged in digital lending, at least I can say it would actually be very productive. Because as I was discussing earlier with someone, the fintech industry in this country is driven by a few large players. Then there are, kind of a 2x of that number or maybe 3x of that number is medium-sized player, and there's a long tail. And because, the environment for having fintech in this country is very positive. The kind of adoption of fintech, the rate of adoption is around 87%, which is the highest in the world. We are world's second or third largest fintech ecosystem in the world. All the parameters I can go endlessly, but the whole idea which I'm proposing, sharing is the ecosystem for fintech, incorporation is very positive in this country, as my colleague also said during his comments. Digital public infrastructures, but at the same time, the kind of support which is needs, because it's in a growth phase. Scale-based regulations are there, but the kind of supporting role of a fintech SRO is great. Of course, the prime responsibility of a fintech SRO is towards ensuring that there is a responsible market conduct. There is an avenue for customer grievance redressal mechanism to foster ethical innovation, responsible innovation, and make sure that customers don't fall prey to fraudsters. But also there's a bigger role of supporting the industry in terms of different trainings, in terms of capacity building, in terms of bringing in new technologies, in terms of developing market infrastructure. And by the way of market infrastructure, I know time's up, just 60 seconds. Market infrastructure means, say, for example, if there is a paucity of in microfinance, when it began, there was no credit bureau in this country which used to have that MFI customer data, and that was a piece of market infrastructure which was developed by that time SROs. Now, similar kind of challenges if they are faced, say for example, cyber security insurance kind of a thing, or any other say for example, another is the taking up voice of industry to write platforms in policy and regulations. So I think these are enabling roles, very positive roles, which SRO, FT will kind of perform. And this is I would say is a regulatory innovation. And RBI has laid out clear expectations from SRO, FT in terms of innovation management and putting up an innovation framework, usage of technology, and finally I would conclude my comments by saying that it's a fintech. There is a fin, which is a financial part, and there is a tech, which is a technology part. So technology service providers having a framework for that, because there are so many TSPs, I'm sure some of you are inside the room. So role of a fintech SRO will also be to develop, I see it as developing a framework, putting up some ranking system for those who are high on compliances side. So I think all these things will be the role of fintech SRO, and we are very much on the way to have these functionalities developed, and especially on the technology side, because it is equally important as fin part of fintech is. Thank you.
Thank you very much. Yeah. Yeah, thank you very much, Jatin sir, for putting up the structured thoughts on the fintech SROs, which was really needed at this point of time to get the clarity. And I take the opportunity to thank you, all of you, to be there with us and guide us across this. Thank you very much. Thanks.
I bet you never
And thank you so much for such a wonderful audience. At least you stuck there till the end. I appreciate that, and thank you all.